Hello. Welcome to March edition of SD Worx Payroll Question Time. Just want to check first, everyone can hear me. The chat box is open. If anyone can't hear, there's any audio issues, just pop a question on there. Obviously, we'll do something about it. So I'm Steve. Thanks for joining us. Obviously, we've had a budget this week, so that's going to feature heavily. I'll hand over to the team shortly. Thanks everyone for attending. We're going to be here for the usual 90 minutes. It's free for all, so feel free to ask your questions. I'll be keeping an eye on that and pinging those out to the relevant people, and we'll make sure we respond to as many questions as we can. What we will do is after this share a transcript of the Q&A. Anything that doesn't get answered, we will try and answer everything. If it doesn't get answered, it will still be picked up as part of the follow-up when we share an email with everyone next week. We'll include the full Q&A from today. So without further ado, I'll hand over to Simon. And Simon, away we go.
Steve, welcome everybody to the payroll question time for March. That's 2 days after the budget, so we're all hot off the press, aren't we? Geared to go with all the fantastic changes that have been announced by the government, or in trepidation of all the changes that are there. So I think we'll deal with, so if you've got any questions, please ask away. We have that on the slide that comes up next, Steve. Thanks very much. We will introduce everyone, or I'll ask them to do a brief introduction of themselves. Just need to cover off a little bit of a legal aspect on the next slide, which is the fact that the presentation does not provide definitive answers to individual queries. In some places takes views on matters which are uncertain. It's not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. We'll try our best to answer the questions we can in an open way without any specific detail. And sometimes we're aware that the real question can sometimes be different to the one we actually hear. So just be aware of that. Now let's go into introductions if I can. So I'll start with myself. I'm Simon Parsons. I'm the UK Compliance Director at SD Worx. I've been in the industry just a few years. I actually joined Centrefile as it was in 1984. So a little bit of time, and this is my third sentence. I've been back 24 years and deal with government relationships and the application of compliance within our solutions. Let's see, Kirsty, would you like to tell us a little bit about yourself?
Yes, please. Hello, Simon. Hello, everybody. I'm Kirsty Rogers. I'm an employment partner at DWF. Done employment law for far too long. I'm also head of ESG at DWF and looking into that agenda very closely now, which is gathering some pace. I'm delighted to be here as usual.
Sure. Now, we first met each other dealing with furlough for another organisation, I think, doing presentations together, and it's been great. John, tell us a little bit about yourself and what you do.
Yeah, sure. I'm an employment partner at DWF, based here in Liverpool. I too have been doing this job for an awfully long time, and that's the fact I think it's so long I can't even remember how long it is anymore. But delighted to be here.
Thank you, John. Lou, vote for Lou. Tell us a little bit about yourself.
My name's Lou Gray and I'm Head of Transitions and Operations at EY Absolute, based in Belfast. I have over 30 years in payroll. I'm also a Reward 300 member and I have chartered status with the CIPP. And yes, indeed, Simon, thank you. Vote for Lou to be on the board of directors for CIPP. Thank you very much.
That's okay. And it's glad to have you. I think it's about your fourth or fifth one. Sam, introduce yourself, Sam, and what do you do now?
Yes, hi Simon. Yes, I've got a new hashtag on the vote for Lou. Lou got my vote hashtag. So if you haven't already voted, you're a CIPP member, hashtag vote for Lou. Anyhow, yes, but in the meantime, I am Samantha Mann, and it is my absolute pleasure to be the payroll training consultant at SD Worx. No, not SD Worx, this is SD Worx. Oh, crumbs, that's good stuff. Armstrong Watson, can I blame the budget, please? Armstrong Watson, payroll and employee services. And I've been there since January, but I actually first started in payroll when I was 16. Which I'm not going to give away my age, but that was 41 years ago. And I've done a number of different jobs since then, but largely working in payroll bureaus. So it's nice to be back at Armstrong Watson. But the last few years, I've been at the CIPP on the policy team. So it was very nice to actually take a bit of a break from the budget this year. Although I did watch it, I'm as addicted as anyone else. It was nice to be able to go, I don't have to write anything about this. So. Me.
You, Sam. And Andy, we've known each other for a long time. Tell us a little bit about yourself.
I work for a regulator in the automatic enrolment area, compliance enforcement team, but on the Educate Enable. My main role is to help payroll software providers build a well into their system. And obviously my background's all payroll for many years. Yeah, to help on any pension related stuff, all be well.
Yeah, thank you very much. Andy, should we go to the next slide, Steve, which covers today's discussion topics. So we have some pre-prepared discussion areas, and then we'll enter into a Q&A type area where you can start filtering through your questions. So if you have anything, type away. If they're just personal relationship matters, we might not be able to deal with it, but if they're employment law, payroll, practice, we may well be able to deal with it quite well. So ask away, and Steve will moderate those and pass them through as they fit in. So we'll start with budget 2021 and what happened. So it could have been a bit of a surprise for everybody. We're all led to believe something was going to happen, and then Wednesday arrived, and well, I guess it did. So now we're going to go for a temperature poll. So following this week's budget, how is everyone feeling? You more positive than last month, the same as last month, less positive than last month, or what budget are you talking about? And I think, Sam, we're going to go and respond on this one's on the results for us, and then probably
Yes.
lead a little bit on the budget.
Yeah, absolutely, absolutely. And oh, crumbs, how's everyone going to be feeling? Well, it depends on the weather, I think, where you are at the moment in the GB. If the sun is shining brightly, then you might be feeling more positive. But if it's not, you might not be. And it really did just depend on your relationship with furlough, I think, after this month's, after this week's budget, as to how positive or otherwise you might be feeling.
So just a couple of seconds, I'll let a couple more votes come in, and we'll share. But okay, let's take a look. So it says it's collecting responses. Okay, here we go. Oh,
We've lost the results, Steve.
did it share? There we go.
Same as last month. That's actually, I'm going to take that 73% as being positive. I'm hoping that people were feeling positive last month when they are remaining the same this month. And it's reassuring to know that there are people who choose to live a life rather than focus on the budget with that 1%. So thank you very much. So that actually kind of leads me on nicely just to talk about a few of the different areas that were covered in the budget. There was no major surprises. Yes, the budget's always hailed as going to be like a life-changing event for everybody, and not least the Chancellor. But, you know, much of the important stuff of payroll we already knew in terms of tax thresholds and NIC thresholds in advance, which of course is all important for the software developers. If we move back to the budget slide, because the furlough extension's been dealt with separately, let's have a look at a few items that aren't furlough related. So it was reassuring to know that the statutory sick pay recovery for employers who have 250 employees or less as of last 28th of February can continue to recover up to 2 weeks statutory sick pay where it's being paid for COVID related absences. And of course, we remember that it was more or less this time last year when we first heard that statutory sick pay, where the absence was for COVID related illnesses, and a PIW was formed, that the 3 waiting days wouldn't need to be served, which was quite a major change, not least of which because Boris Johnson told Parliament about it, and that in itself was quite miraculous to hear a Prime Minister talking about statutory sick pay. So knowing that that's going to continue until further notice, really, there was no end date on that. We're going to hear a little bit more about that in the future. I personally was hoping to see a little bit more about statutory sick pay and when statutory sick pay is going to be adapted to become more flexible to allow for phased returns. But that's obviously one for a future day. What was quite significant was, of course, the news that the personal allowance and the higher rate allowance were going to be frozen following the increase in April 21-22 to £12,570 for the personal allowance and 50,200 I'm going to say 270, but that's because I can't read my own writing. For the higher rate tax allowance, they're going to be frozen now till 2026. And this is in recognition of the fact that, that COVID has cost the government a significant amount of money. And the Chancellor wasn't keen on breaking his pledge not to increase income tax rates, but nevertheless an amount has to be recouped, and by freezing the personal allowance and the higher rate allowance, that will go some small way to recoup that. The disadvantage, of course, for those middle earners is it's going to drag more people into the higher rate income tax than previously. National insurance upper earnings level, we'd heard what that was going to be before the budget, but that's going to be remain aligned with the tax higher rate until also till 2026. We heard news about free ports, which are going to be coming into play at a location near you, by all accounts, by 2022. And there'll be more information about that. Why that's significant for payroll? Well, because we're going to see variances. Because the idea is to encourage greater employment in there, we're going to start seeing variances for payroll professionals who are dealing with payrolls in free ports as opposed to payrolls that sit outside of free ports. And of course, this is Great Britain, not Northern Ireland. The big news for me really was the unsurprising news that there's going to be a huge investment into HMRC's compliance teams. So in the form of a taxpayer protection task force of £100 million to recruit just over 1,000 new staff to HMRC, whose focus will be on ensuring that the right taxes paid at the right time. And this is again in a bid to narrow the tax gap. If we can narrow the tax gap that currently is estimated to stand at around about £31 billion, we would go a long way to recouping some of the expense that the Chancellor has paid out on dealing with the COVID pandemic. That I am going to kind of come to a halt, because that takes us really on to the furlough extension, which I think really is the one that everybody wants to talk about.
All right, thank you. Lou, do you have anything to add on the budget? Any thoughts initially, accepting furlough? We're not discussing that just yet, in a moment.
The only thing I would just mention is the exemption for home office expenses that has been extended, and that employees and employers are allowed to look at it up to 21-22 tax year. I think that's important that that is mentioned, so that people, if they are able to take advantage of it, they do. And also just to mention the cycle to work scheme as well, and the slight amendment that the government had around the wording, and because there had been that query on when an employee is buying a cycle to work, getting involved in the cycle to work scheme, the fact that they're not maybe in the office, they're not actually cycling to work, and they're actually using that and the equipment that goes along with it. And that's all.
Sure, thank you. Andy, we're anticipating changes to tax relief. There wasn't any, was there?
No. I mean, in terms of, apart from the lifetime allowance, which we can discuss perhaps when it gets to pension, but
Sure.
We're waiting still to hear from Treasury as to what their decision or what their thoughts are, at least on the call for evidence over the tax relief administration process for those who don't pay tax but have a net pay arrangement scheme, as opposed to those who have a relief at source scheme who do get a tax relief. And so therefore we wait to hear, really. I've not heard anything, and I've chased colleagues in the various government departments to see if they can find out anything. I guess anything I can say is that the AE thresholds have gone through Parliament, they are approved, and no surprise, they're going to continue as they were for the current year, apart from the upper threshold is continuing to be aligned to the upper earnings limit. So the upper threshold is tracking the same values as the upper earnings limit for national insurance. So 21, 22 will be very similar in most accounts for everything, almost, including pensions.
Any thoughts, John, on the budget from your angle?
Well, there's developments from IR35, obviously, but maybe we'll pick those up in the hot topics bit.
Okay, should we move on to, and you can comment on the budget generally, Kirsty, as well, but let's move on to furlough extension. We'll lead in with
just before we move on to furlough, I think we've got a couple of questions in now, probably just worth picking up. Some can, obviously, we can pick up in the hot topics, but just a few under kind of similar, under a similar theme. So I'll start here. Can an employee pay for the desk chair for a member to be able to work without it being a taxable earning?
Yes. Lou, can you comment on that one? I think I know the answer.
Do you think you know the answer? You work away.
So potentially yes, but I think there's an element of look at what the arrangements are, but there are concessions that actually the employer can buy equipment and give it for the employee to use. But you need to look at the scheme rules associated with it just to make sure you've complied. Quite often I find in payroll and benefit terms, lots of people think because it's the same amount of cash, they can do whatever they like, and you can't. So you have to be very careful on construction and wording and agreements of what it is. So for example, common area that people get mistakes on is salary sacrifice. And you think, well, it's just 100 quid. So no matter how I use that 100 quid, it makes no difference. And as a tax person, I've got to say it makes significant difference what you call it, what you label it, and what the agreement is. So it could be taxable or non-taxable. So yes, there is concession. Would you agree with that, Lou?
I would. I'm fortunate that my employer actually would purchase that on my behalf and then have it delivered to my home. So I am very fortunate when it comes to that.
Yeah, Sam, any thoughts from your payroll expertise angle?
No, nothing really to add to what's already been said. I mean, essentially, this is just extending the allowance that has been covering spanning the 2020-2021 tax year in recognition of the fact that the pandemic's going to lead us beyond there. And like Lou said, the most straightforward way really is for the employer always to be kind of making those purchases and providing the equipment, but these allowances do go slightly further. But again, look at the rules, look at what's look at the reason that that chair's been purchased.
Okay,
yeah.
thanks.
Is there another one as well, Steve?
Yeah, just a couple more before we move on. So we've got, I understand for the current tax year and following tax exemption reimbursement for coronavirus antigen tests, is this something that should go via payroll or expenses?
It doesn't need to go anywhere is my initial thought because it's tax free. Do you want to repeat the question a little bit so I just make sure I've got it?
Sure. I understand for the current tax year and following tax exemption reimbursement for coronavirus antigen tests, is this something that should go via payroll or expenses?
Either. Any thoughts there, Lou? I'm coming to you there. I actually think you can give it to them in any means you like. It's not subject to tax and NI.
And that's my understanding, that it is exemption. There is exemption from tax and NI, so it would just be a payment just to cover that.
Yeah.
And
So
I would, I would
Yeah.
add that you would pay it in the usual manner in which you reimburse expenses.
Yeah.
Yes.
Okay, thank you. Another one, because a couple of these we can pick up as part of the next section or two. But do employees pay higher rate tax from 50,270 from next tax year, or is it from 37,701 plus personal allowance?
Yes, that's that latter choice. Of course, it's yes. I was taking the whole amount, whereas we're looking. You have your 12,000. You have your personal allowance, which is essentially 0%. That's how much you can earn before you pay income tax, and then you move into the taxable pay element.
Okay, understood. And then one final one. Sorry, we've got could Lou repeat what was said about cycle to work schemes? I missed that, please.
Yeah, cycle to work extensions, Lou. Do you want to cover that one again?
Yeah, I'm just looking for my words, sorry.
That's
It was in relation to that for the period commencing the 16th of March 2020 and ending up now on the 5th of April 2022, that the extension had been provided. It had been up until December, the 21st of December, but they then have confirmed in this budget that it's now up to the 5th of April 2022.
Yes. So the issue and challenge is that the use of the cycles is meant to be for commuting or work purposes, and if we're all sat at home, it can't be. So there's concession to allow the benefit to continue. Shall we go to furlough?
Yes.
Kirsty, tell us a little bit about the furlough extension.
I'll tell you a little bit. I'm sure most of you know already, because actually this time there was more of an expectation that the furlough scheme would be extended. And I think increasingly as the announcements have been made about furlough, they've become more expected and anticipated than a complete shock, which I think you remember this time last year. Nobody knew there was even such a thing as furlough, and people were, what does furlough even mean? Has anyone heard of that word before? So this time we've got the government is extending the CJR scheme for a further 5 months from May until the end of September, and they've done that in pretty good time, given that people can't serve notice as they could do in each of the other updates. So we weren't at a cliff edge, and well before the time for collective consultation would stop, and employees will continue to receive 80% of their current salary for hours not worked. If that's agreed in a furlough agreement, just remind everyone to keep up to date with their furlough agreements and make sure they're extended and agreed, and you've got copies of them, because after what Lou and Sam have said, there's obviously going to be a review of all documents once this task force are in place. And there won't be any requirement for employer contributions beyond national insurance contributions in April, May and June. But from July, the government are going to introduce an employer contribution towards the cost of unworked hours of 10% in July, 20% in August and 20% in September as the economy starts to reopen, we all hope. So I think the important thing is really to check the position that you reached with your employees in terms of furlough, whether that was time barred, what it says about extensions, and what agreement you've got in relation to pay, especially going over the new rates and the new tax year as well. I think it's going to have an implication. And of course, we'll have some people who will have been on furlough for a year, which is quite a long time. But I'm sure my colleagues will have something to say about furlough.
I'm sure they will. Sam, any thoughts on the new furlough scheme?
Oh dear, here we go, Groundhog Day or Groundhog Month or Groundhog Year. So we're well past the 2nd of February, so this is real. This is getting personal. I mean, talking to colleagues and associates in the payroll world, you know, there's a real love-hate relationship. We recognise the value that the furlough scheme and the job retention scheme has brought to the world of employment. It's, you know, it's prevented mass redundancy on a scale that we've never seen before, and enabled that link between employment to be retained. I think, as touched upon there by Kirsty, I think the concern that is growing is the actual compliance that employers are maintaining with the job retention scheme, you know, ensuring that they are reaching these agreements, that they are confirming them in writing, that their record keeping is intact, that they are checking the claims that they are making and making corrections where they find errors, because it's very easy to stick our heads in the sand if we discover an error and hope that it'll go away. It won't go away. HMRC have powerful systems to check what we're doing and when we're doing it. So you know, I think it, you know, to follow on really from Kirsty, is it's that emphasis on compliance that came through in this budget, and if we add that to the 10-year vision that HMRC published last year, which again we're seeing kind of drip feeding through the budget in terms of increased funding to HMRC for compliance, and of course we're waiting for tax day, where we know that HMRC are going to be, and government are going to be publishing more consultations together with a command paper. I've never heard of a command paper. I'm going to ask Simon what a command paper is, but the budget tells us that that's what we're going to be getting on the 23rd of March. So whereas now we would normally be discussing the detail of various consultations, we aren't. But I think there's going to be a really strong emphasis on compliance, and furlough is leading the way, as opposed to national minimum wage, which is rather nice.
I think they're encouraging tip-offs as well from employees, and they've extended what they're publishing about furlough payments from this last month, haven't they? So I think where you've got disgruntled employees, you may get more reports, and even where you haven't, people will be concerned about it from their own position if they don't report.
I mean, that's quite right, isn't it? But yeah, the naming on the personal tax account started on the 25th of February.
Yeah.
It's been going just over a week and a bit, and I think there's an element of encouragement of people to look at their personal tax account to see what it says, and if there's a discrepancy, whistle blow. Yeah. You want to say something, Sam?
I was. But you know when you're going to say something and you don't want to interrupt and it goes out to the other side. So I'll come back to it. Bear with me.
Shall we take a poll on? We had a couple of furlough questions. What we could do is I'll fire up. We've got a poll that we'd like to ask on furlough, so I'll fire that up. And while people are responding to that, we can maybe pick up a couple of the questions that we've had. So coming up is poll on furlough. Has the budget announcement changed your workforce plans? So yes, we will not progress. We will not progress with changes we expected to make. Yes, we will need to make changes, but at a later date. No, we will progress with the changes we were planning, and we are reviewing everything all over again. While everyone's responding to that, we had one. Has advice for shielding for the clinically extremely vulnerable been extended beyond the 31st of March in light of the extension of the furlough scheme? Do we know that?
I don't know if someone wants to pick that up, but I suspect the answer is yes, it has. It goes along with it and continues. Any thoughts there? Kirsty, are you aware on the shielding aspect?
I'm not aware of it yet, but I think it will be. It'll catch up, won't it? That's what's tended to happen.
Yeah, I haven't seen anything that's updated it since then.
Okay. Furlough, for those employees who have been constantly employed since lockdown 1, is there any specific guidance on the reference pay to be used if the employee has reduced contracted hours and therefore salary? Should current salary be used rather than reference pay from February 2020?
Okay, I'll start off with that one if I may. So the reference pay rules and usual hour rules have not changed, and so they remain at the original. is where I'd start. We can talk a little bit about the newbies, if I call them that, but there is no change that I'm aware of. Anybody else aware of anything? I think because why have you reduced hours now? Is that because of COVID?
Yeah, no, I would agree with you there, Simon. If they were furloughed back in February, March time, that pay would be the reference pay, and that would continue. Really, you know, we've seen this sort of sliding scale of dates where you would look at a reference period. But only for new employees who've begun since the furlough scheme was first announced, and we're seeing that again with employees who will be eligible for the extended furlough from the 1st of May. You know, so again, we're seeing, you know, that different reference period that we need to look at, because they are new employees, so they weren't with the employer back when furlough was first introduced.
Okay, Kirsty, do you want to respond on the poll response there?
Yes, I would have thought there would have been more in the bottom section, which is we are reviewing everything once again. Interesting that it's not made much difference. 70% will progress with the changes they were going to make anyway. So yeah, quite surprising really. Which suggests that, you know, the furlough isn't what everybody is relying on to make their business decisions. They're looking to the future and are happy with what they've got at the moment as the status quo, I suppose. Yeah.
Well, we've been hearing a little bit on the street of some employers actually trying to get loans off their employees for the tax and national insurance. Not the tax and national insurance. Yeah, the national insurance and pension contributions, because I guess they're reaching a point where they can't afford them. I'm not sure that's good practice or even allowed, but I guess with July and August, actually the employer having to take on further contribution. But is there potentially a view that the government are thinking we'll start to get back to normal anyway, so why would you need it?
Well, April's when shops start to open again, isn't it? So maybe people are thinking we can start business as normal, so the furlough bit isn't that important for all their staff, at least. Difficult to tell, really. Yeah.
But then there's been a lot of businesses have discussed restructuring. So maybe that restructuring process has already started, or maybe they've already committed and they're going into looking at the redundancies, and that stage has now commenced, even though we've had more notice this time of the extension going from the 30th of April up to the 30th of September. But if we think about it, it's been maybe some businesses have been badly affected by this for over a year. So there has to be some point of looking to the future for them to decide how will their business reopen and under what form.
That's certainly from my, a lot of the larger employers have already gone through that exercise. And of course, with furlough, it's been a question of businesses operating on when furlough is going to end, and it's forever being extended. A lot of them made their decisions of reorganise their workforce to the right size already. So certainly I'm seeing slightly less of those larger scale redundancies exercise. So maybe just a reflection, say that people having already carried out exercises restructure.
So if we summarise some of the in relation to the questions, Steve, the earnings reference salary stays the same as when the person was first qualifying for the scheme. It doesn't matter whether the scheme was used or not. So if people are freshly going to furlough from May and they've never done it before, but they're employed in February last year, the earnings reference salary is February last year. If they're a new employee, then it's based on the October rules up to October. And just to clarify for people, the extension doesn't mean those who are employed up to the 2nd of March can join the scheme now. They can't. They qualify for the scheme which starts on the 1st of May. So just so you're aware. So if they're a new employee from 30th October, it now doesn't bring them into scope of what's going on now. It brings into scope for CJRS, I don't know, is it phase 4? They qualify under that new scheme. 5, is it, Kirsty, did you
I
say?
think it might be phase 5. Yeah.
I
One
lose the
question.
count. I'm just looking at the guidance here, and there's been 45 iterations just of this space guidance. Never mind anything else.
Phase
Almost a
5 is
change
the
of
phase
wind.
grant. Maybe it's up phase 5. One of the questions I have had is about maternity returners who return and then go on furlough, and they're returning on a part-time basis instead of a full-time basis, and then saying, but it's got to be based on my previous hours, which were full-time. So do you prorate it? I presume that you do, because they're not, their working hours will be something different, but
Yeah, any thoughts, Sam?
Well, oh, now that's an interesting one, because I was thinking of the rate of pay. Oh, crumbs! You know, that's a really difficult one. The guidance suggests you would use the maternity, the pre-furlough
yeah.
maternity pay, but that's talking about pay and not hours. And yet we've had this question and these variations of this type of question since furlough began, and the answer has been, there's your reference period and how does it fit, and when it comes to people returning. But that sounds,
you're returning on a completely different basis, and you've made an application, and there's more and more of it because more people are returning from maternity leave, and actually more people have decided they want more flexible working than they did before.
Yes, I think as a direction notice is written from, and which is the legal basis of it applying, it goes back to the original periods. But I do know that some have asked the question of the online service with HMRC to see, and may have had different answers.
Yeah.
It's where it's one of those on the fringe grey areas, isn't it?
Yes.
If I took the black and white words, I think the reference periods sticks to the point of hours, usual hours from reference salary, regardless. But others may have a different view. It's a tough one. We'll probably get an answer by the end of September. Is that right?
They'll be out of time to pursue a claim then. But anyway.
Someone else asked
Get it by the 15th of October. Yes.
So the last one I just
All right.
before we move on. Someone had just put, I thought the reference period changed to October 2020 if the person hadn't been furloughed previously.
No, sorry, I was a bit blunt on that one, everyone. It doesn't. If they were employed in March 2020, it's the prior period, not new. Sorry. It's the new employees employed from the 20th of March through to the 30th of October. Kirsty, shake up your thing. Definitely not. You might need to look at your furlough claims if you've done that.
And I think that comes back to the point that we've mentioned over the last year about evidencing, and whenever you're making decisions and you're compiling your reporting, that you save everything down at that point whenever you're submitting your claims, because that is key, especially as, Rishi has announced that we are going to have this new task force, and this will be a long-term project. If you look at some of the reports in the news this week, they were talking about almost 52 million fraudulent in relation to furlough, which was a frightening statistic. So this is going to be seriously looked at and investigated, and people and employers will have to be able to produce the information and the legislation at the time that they made those claims.
Will there be naming and shaming?
What further naming?
Likely.
Of furlough fraud.
I would be surprised if there wasn't, given that this government and previous governments, delight in using the naming and shaming, and we only have to look at automatic enrolment. That really, I think, kick-started. The pensions regulator kind of led the way with this, and other government departments have said, "Oh, that's a good idea." And use it in a whole myriad of cases. So I'll be surprised if that wasn't the case. But it's been dealt with as if it were a tax debt, wasn't it? So, and at the moment, employers aren't named and shamed, or individuals aren't named and shamed for tax deviations, for want of a better word. But I would be surprised if ultimately that wasn't the case. You know, it's a good deterrent to have, isn't it? You will be named and shamed, you know, if you don't correct your errors.
Yeah. If it's genuine mistake, I think the revenue would take the position of pay the money back that's wrong, and all's forgiven. But if it's fraudulent outright, well, we've already had named prosecutions, haven't we, and arrests that have been given to the press to write stories on. But as a general principle, if there's a genuine error, the base would be similar, I would suggest, to the pension regulator, actually, Andy, is you'd expect them to just put it right. Is that right?
Yeah.
First?
I think that's logical, yeah. We would just expect people to put it right. And then only if they weren't would we go to penalties.
But if you think about it, we now have tax digital. So employees are going to be seeing what has been claimed on their behalf. So that takes it to a slightly different dimension on whether we're back to, you know, employees who feel they've been wronged.
Yes. And as you've taken us there, I guess it's not related, but Lou, he announced change to apprenticeships. What do you think about apprenticeships and what's the change?
Apprenticeships, I mean, just to give it some scope so that everybody knows where we're coming from, are for anybody aged 16 and over that combine working and studying to gain skills and a knowledge of a specific job, and that you need to pay the apprentice the minimum wage. So what they have announced in England is that there'll be an increase to this payment of £3,000. There was also the added value to it that several industries had mentioned in the past that project-based employment is the norm. They struggle to find a year's work. So they've announced that they can have a portable or a flexi job apprenticeship, which means that it's not just going to be one employer, that you can have a group of employers working together for this apprenticeship. And I think that helps, you know, for some of the trades and the apprenticeships that there are, you know, in any field. I mean, it's very useful, and this additional funding will hopefully help businesses plan for the future, because maybe without that it would be more difficult. That is the incentive, to bring people in and to train them up.
Okay, thank you. Can you remember when it starts? So it isn't if I take on an apprentice today, is it 1st of April?
Yes, I think it's between 1st of April and the 30th of September.
Yeah.
Right. Yes. Fantastic. We had a poll on this one, unless anybody else wants to say something on apprentices. Okay, so apprenticeships, will the doubling of the apprenticeship payments to £3,000 change your investment in traineeships? And I think there's been some recent press releases, etc., that the apprenticeship levy funds aren't quite being utilised by employers as maybe the government had originally thought they would be. So is this all past that programme of thinking you've not only got this payment of £3,000 to take on apprentices for 6 months, you've also got your apprenticeship levy funding to pay for other elements of it? And when we get the results in, Lou, are you happy to comment as well, as you've led us so ably into the topic?
Absolutely. I think apprenticeships, you know, are very important, especially during this time. You just have to even consider the payroll apprenticeship, you know, who it would be an opportunity. The probably part of the issue we'd be facing is devolved governments maybe handle it differently. Northern Ireland mightn't be doing it obviously the same way as England, but it would definitely be something to look at and investigate. And if you're actually going to be employing people, why not consider apprenticeships whenever you look at the benefit you have of learning and hands-on experience?
Okay. The results in.
Yeah.
So only about a 10 or 11% potential change there.
Yeah. Maybe with more detail and background behind it, and maybe if it's clearer how you go around getting this money and how, if it's made easier to get, maybe that will increase over time, and as the pandemic lifts and we're allowed to go back into the normal life that we used to live.
Thank you very much. Right.
Yeah, these
I think that's
poll questions, Simon. These poll questions are always, I don't know about everybody else, but you look at the answers and you think, oh, now could we ask that question? But of course, it's just a snapshot, you know. And there's, you know, but I would like to think that, you know, there's certainly a huge pressure on, you know, promoting apprenticeships, promoting training, the quick starts. I know the Kickstart schemes, I know they've been criticised by political opponents to the government, but you know that again, there's good opportunities there. And then when that's coupled with the plans to build investment going forward, particularly in infrastructure projects, one would hope, particularly the infrastructure projects, they're the ones who are traditionally apprenticeship heavy. So you know, it would be good to see you know, those numbers changing a little bit in the future. So
yeah, I think it opens it up now, because the former scheme had age bandings to it. This has no age banding, but equally, I think the ONS statistical reports as a result of COVID pandemic have shown that the majority of UK individuals who've really been impacted by employment are those between 18 and 24. Which seems incredible, doesn't it? But then I guess we've got a whole pool of graduates and school leavers who are trying to get into employment, and we're all shut down. So that must be an area of concern. Should we move on to, we'll leave the budget now and we'll move on to pensions. And Andy, do you want to tell us what the latest is? There wasn't a pension surprise overly, or was there, in the budget, if we kind of include that?
The only thing on the budget on the pension was the lifetime allowance remaining fixed at the current tax year's value of just over £1 million, and fixed until 2026, which is interesting because obviously doctors and so on were saying, you know, we can't join the pension scheme, and there'll be more people that would be caught by this £1 million limit, which means from a very practical point of view on a payroll front, there may be more people saying, don't automatically enrol me, because if you do, I need to opt out, because if I pay into the pension scheme, I'm going to breach the tax relief side of things that HMRC give me. So you may find there's more employees who are saying, please don't put me in, please use the exclusion reason, the exception. You don't have to automatically enrol people who got HMRC tax protected status for their pension savings. So you may find you get more information on that from individuals saying, yes, I'm covered. You need evidence, you need to see the letter HMRC have sent them, but you can then exclude them for automatic re-enrollment.
I might get you to repeat an area there a little bit, Andy. So just what Andy is saying there is, these types of people who would breach, you don't have to auto-enroll. Whereas before, opt-out was sort of something you had to do after auto-enrollment. Is that right, Andy?
That's right. So you have the right as an employer to not automatically enrol or re-enroll these individuals, as long as you've got the evidence, which is normally the letter they've got from HMRC to say that they're covered in some way for tax protected status on their pension savings. So you can, in effect, ignore them for automatic enrolment.
So you can't assume it, I'm presuming. You need the evidence from the individual.
Yes. Because otherwise, if the individual says, why didn't you enrol me? Not that they should, then we'd be asking for the evidence, and you need to show the evidence to TPR that you've got it. They still have the right to opt in, you know, that's their choice, but normally you can't pay more into a pension scheme because you've already reached a limit. Hence the need, hence the relaxation about not needing to put them in. Obviously, that's quite detailed, and it may not be significant to you as an employer. You may have a new starter who actually has that already, has got £1 million built into their pension pot already, who will be saying, don't enrol me, here's the evidence. If your payroll system's good, it will have a little drop-down box that says, don't, you know, you can exclude this person because they've already got HMRC tax protected status. Yes, that's going to detail, isn't it? And so by all means, contact us, and we'll get the TPR helpline will help you understand all that. I think in terms of general AE stuff, the pension providers have a requirement to notify TPR if you haven't paid your contributions over, or the contributions don't appear to be correct after 90 days. That was extended to 150 days during COVID, but it's now been brought back to 90 days. So by the end of March, all pension providers will be having to tell us, no choice, if an employer hasn't paid their contributions or they don't think the right amount has been paid. Obviously, automatic enrolment continues as normal, so please continue assessing and putting people in, whether on furlough or not. The other big thing, of course, is the pensions bills come through. Just received royal assent a week or two back, and that covers new powers that TPR have, mainly to do with anti-avoidance, but things like unlimited fine. If you're an employer and you get a contributions notice from us to say you now need to pay contributions over to the pension scheme, that can, if you don't do it, we'll have the power to issue an unlimited fine. We'll have criminal prosecution requirements up to 7 years in jail, or £1 million civil penalty. Pet fine can be, so there's a lot of penalties, but there'll be a lot of consultation. In fact, new pension scheme like collective defined contribution schemes, which is not DC, it's not DB, it's a bit of both. So it's new. Payroll wise, really, whatever pension scheme you have, whether that changes or not, you just need to know what the rules are for that new pension scheme, don't you? The pensions dashboard is coming in, and the minister said 2023 that'll be live. So a lot of consultations will be going on, and you need to, the impact on payroll is probably about missing data. You know, and there's been the McLeod Sargent judgment about age discrimination. I think the issue there is that if you've got public sector, if you're in the public sector and you've got a public DB scheme, or maybe you're a Payroll Bureau and you've got an academy and they've got a teacher's pension scheme and stuff like that, then is there enough information available for the pension scheme to know whether or not it's better for that individual when they're retired to be final salary or to be calculated in career average? And if there's gaps in the data to achieve that, then they may be coming straight to the employer, which could be to payroll, to HR departments, or to Payroll Bureau to get those gaps filled. So there may be some upcoming information requirements for payroll to complete. What else? I think just lots of consultations going on in order to meet the pensions bill side of stuff and all other stuff.
Yeah, I see questions on social media and in relation to sometimes collecting records. And sometimes I think we have a bit of a myth in payroll that we're only allowed to keep records for 6 years, but actually there are legal obligations to keep certain records longer. Would that relate to pensions?
It will do, yeah. The pension provider and the employer have a duty to make sure they have enough information kept, mainly on the pension provider, but it depends how they link one another with the employer. And that could be like 100 years. Because you need to make sure that you can pay out the right amount of money to the last surviving person who needs to have a pension. And I think there was a case, wasn't there? The American Civil War, there was the last person that got paid a pension from the American Civil War was back, I know it's American, but it's just to give an idea, was in the 1900s, because an individual who had fought in the American Civil War was really old, and he decided to marry, or he married a very young lady, and then she was entitled to a pension, the Civil War pension, and she of course survived for a long time. So you can't just think it's going to be a short period of time. So
I think just on that though, I think people need to resist the temptation just to keep everything because of the data protection requirements. So, and we often get asked, well, how long is it that we keep everything? And it's like, well, everything's different. It depends what you're talking about. And you just need to be able to justify everything.
Exactly, Kirsty. But sometimes people use the excuse of data protection to get rid of information that actually data protection requires you to keep. But it's a question of knowing what you should keep and what you shouldn't, and there's certain data you do need to keep beyond
And
6
why
years.
you're keeping it, you know, why
Yes.
you're keeping it as well. And some you shouldn't have for 6 years.
Exactly. Yeah.
We've got
Sorry,
a
Andy, we cut you off there.
so we've got a
Yeah, you got a
question.
question?
Yeah, we've got a question. What I'll do is I'll fire up we've got a quick poll on auto enrollment, which I'll fire up. And then a couple of people asked the same thing, that we can just clarify. Have we had confirmation on the auto enrollment thresholds?
Well, yes, we have had confirmation auto enrollment thresholds. The lower threshold and the trigger are not changing, and the upper threshold is changing, and it's changing to be the same figures as the upper earnings limit for national insurance. It's the same weekly, monthly, annual, etc. figures for that. In terms of the poll, I am hoping that everything's remained the same. The surveys and stuff that we've had done and seen from pension providers, etc., is that the actual numbers of people reducing or opting out has remained on par with what it was prior to COVID, which I hope is because of furloughing, etc.
I was going to say, Andy, you trying to rig the poll?
Sorry?
Yeah.
You're trying to rig the poll?
Yep.
Yes, I am, because that's how it works in government, isn't it? No, that's not. Can't be true, surely.
Yeah.
But yeah, just on the poll, so yeah, has the number of employee requests to reduce or opt out of auto enrollment pension contributions, has it increased, stayed the same, decreased, or don't know? I think we're pretty much there. So let's close that and share the results. Let's take a look, see what we've got.
Yeah,
Right.
that's. I was trying to guess what the answer would be. Not obviously make people feel that they've got to say that, and that isn't the case. That ties in very nicely to the sort of findings that pension providers, etc., have shared publicly, except on it. So that's good, really. I mean, that probably means that furlough is working. You know.
Yeah. Well, I've come across some situations, Andy, where someone's going to go on maternity pay. I think we had this discussion a few days back, so just to refresh. So they're in a salary sacrifice pension scheme. They're now on furlough. They're finding things a bit hard. They're going on maternity leave. So they seem to think they need to go and cancel the pension scheme. And it sounds a big mistake to me.
Yeah, if someone, the simple rule is if you're on maternity leave, when your maternity pay period is 39 weeks, then employee contributions are based on the amount of maternity pay you're receiving, or whatever the definition of pensionable pay is if you're getting extra pay. But if it's just statutory maternity pay, then we'd expect you to pay contributions on SMP based on whatever the scheme rules are and contribution rates. But the employer pays based on the pay you would have had you not been on maternity leave. And there's sort of rules behind that in terms of how you calculate that. But in simple terms, it's as if you haven't got a maternity leave. And so the employer will be paying their normal employer contribution. So if it's salary sacrifice, then all of that is due to be paid. Your salary sacrifice amount as well as the normal employer contribution. And whether or not the employer can recover the salary sacrifice amount from any pay that you're receiving on maternity leave, that may be true depending on what else they're paying, but they cannot recover it from a statutory maternity pay. It's not allowed. So anything else they're paying you, possibly subject to what the agreement is between you and the employer over salary sacrifice, may be able to recover, maybe from occupational maternity pay, for instance. That's down to the employer and the employee to see what the agreement says. So yeah, if you're going to maternity leave, I wouldn't leave the pension scheme.
Yeah, same for furlough. Actually, if they're on furlough and salary sacrifice scheme, the employer's on the hook.
Indeed, yeah. And the individual's getting less pay anyway, so they have, from their own perspective, because their pay is on a lower value, then they have, in a way, their furlough pay is lower, and the employer will need to cover all of it, all the employer contribution.
Andy, someone here has asked, does the employer have to pay pension once SMP has ended?
No, it's the 39 weeks. It's the statutory 20 pay. Whenever that's been paid, it needs to be employer needs to pay their bit.
Yeah, it's just the individual is in receipt of any money. So if you actually paid some top up a little bit of holiday and stuff on the weeks when SMP, if they're receiving any money, you have to keep it going. If there's a period where there's no money being handed over, it stops. That comes under Social Security law, so it doesn't come under the benefit provision because other benefits have to be provided throughout, and cash benefits don't have to be provided. So you say quite often you think pensions don't have to be provided then, but it's actually captured by Social Security law, which requires it to be done during any paid point of maternity leave.
Okay.
Fantastic. I don't know if anybody else wanted to chip in on pensions here with Andy. The only other thing I'd heard, Andy, is troubles with furlough. Well, not furlough, it's troubles with the pandemic and employees getting hold of national insurance numbers. Affecting them. Yeah.
Yeah. I mean, there's where you've got a relief at source scheme, the pension providers invariably want you to have a national insurance number so they can reclaim the tax relief from HMRC to add into the individual's pension pot. And obviously, if you're from overseas, then you need, there's a time delay between you starting work and getting a national insurance number issued. And I think you were saying, Simon, that national insurance issuing process has actually stopped because of COVID, and so therefore some of the pension providers are saying we can't recover the relief at source. Well, actually, from my perspective, when we'll investigate it, you're just waiting for national insurance number. It's going to happen. So why aren't you claiming the top up for those people?
Yes. Thanks. Now I think we're going to move on into an area of hot topics area. And John, I think we're going to go your way and see where we, oh no, forgetting that, changes for payroll. So I'll just cover this quickly, sorry for that. There is a link there, sdworks.co.uk. If you do a /leg up 2021, all of the tax, national insurance, statutory payment bans are all revealed there in a little document we've put together. But in effect, everything that was announced before, the budget didn't change a thing. All payroll changes that have already been announced for statutory payments, etc., are going ahead on the 6th of April. The only question mark I'm aware of, and Sam may have a view, is Scotland, because Scotland haven't necessarily settled. They've told us what it's going to be, and we've got announcements for April, but I think it's still got to get voted through. I don't know if you've got any comment there.
No, I've no comment. I oddly enough, I read about this before we met this afternoon, just to check that very same thing. Now, what I read suggested that it had been confirmed, but that's something that I will definitely delve. I took it at face value for what I was reading, so I will delve into that after this meeting, and then we can include a link to an authoritative source after in the answers in the Q&A.
Oh, thank you, John. Let's go on to hot topics. And what do you think of the latest hot topics from your angle?
Well, I'll kick off with off-payroll workers, IR35, in terms of hot topics. And but I think what we do know now is that it's definitely going ahead. I didn't watch all of the budget, but I didn't hear Rishi Sunak mention IR35. If he did, I was probably making a cup of tea at the time. But I think there's a sort of, by not mentioning it, it's certainly going ahead, and that's everyone's anticipation. In terms of what's changed in respect of IR35 recently, there has been a sort of technical correction, as it were, because under the 2020 Act, which enacted the IR35 new rules, it really led to potentially umbrella companies and agencies falling within the scope of IR35. And there's been a correction for that. We haven't actually seen the final amendment to the legislation, I think we're anticipating that. I think it's the 11th on the Finance Act. But the effect of that is just to clarify that if there are agencies and umbrella companies in the chain and employment tax is being put deducted by those, then they're not within the scope of the IR35 regime. So there was that technical correction. What we're also anticipating the legislation is going to reflect what HMRC has trailed, which is there is a change to the scope of potential PSCs who may be within IR35. Because previously, if you're operating through your own limited company, to fall within IR35, one of the threshold requirements is that your limited company is one in which you had a material interest, which would be 5% of the shares in most cases. Now, the change that's coming down the track is going to bring in those personal service companies where the individuals have a non-material interest, i.e. less than 5%. Now, whether that change is going to have a huge degree of difference, I'm not convinced, because let's face it, most individuals have more than 5% of a share in their PSC. But it's certainly something to be aware of, and it does potentially broaden out the scope of those who would fall within the rules. I think the other thing just to highlight probably from the budget was the references to targeted anti-avoidance in respect of IR35. And as I understand it, what it's really going to be doing is targeting arrangements where HMRC perceives that the real purpose of the arrangement is to take it outside of the rules, even if there's no particular business reason for doing that. And so if companies are using models which, on the face of it, saying this is going to be outside IR35, there's going to be increased scrutiny, I think, from HMRC. And I think one of the particular areas where there's going to be focus is around statement of works, which certainly have been touted, and some people believe that in itself, just having a schedule of works or a statement of works would really turn it into a different type of contract and outside of the IR35 rules. So I think there are some potential risks if people are going down some of those models. I think the third change, again, not desperately exciting, but change it is that intermediaries are required to confirm to the person in the supply chain whether the IR35 qualifying conditions apply. And that is a change, because previously it was the worker who had that obligation, or worker or contractor who had that obligation to do so. And I think the final change that covers off payroll working under the budget relates to fraudulent documentation. And if anyone in the supply chain provides fraudulent documentation relating to IR35 status, they can have a liability in respect of that. And potentially there's a get out if you rely upon what you've been told. Previously the get out only applied if the contractor provided the documentation, and I think there's a technical change around that. As I say, I think it's 11 March. I'll defer to anyone else on that, but I think that's when we're going to get the finance bill published, and at that point we'll have a look at just what the changes are in its final form. So that's the changes in respect of IR35 from a budgetary perspective. Should I also pick up? Sorry, do you want to jump in there, Simon?
No, that'd be brilliant. You're going to cover gender pay gap, something that came up last time.
Well, yes, I was. I know that we raised it last time on gender pay gap, and we've had it confirmed. And what's happening with gender pay gap is technically what it is they're suspending enforcement of it. for a period of 6 months. So, I mean, technically, you still have the obligation to comply with it. But the reality is because enforcement is suspended for a period of 6 months, then everyone has got an additional 6 months to meet their 2020-21 reporting requirements. And the ordinary dates that would have been for those requirements, I think, was 30 March for public sector and 4 April for private sector. So, in effect, there's a further 6 month period which has been allowed by delaying enforcement of that gender pay reporting.
Okay, thank you. Any hot topics from your angle, Sam? Oh, sorry, Kirsty, come in.
One of the things I was just going to say on pay gaps is some of the information that's come out this week around the impact of COVID on certain groups, particularly ethnic groups, and the fact that the amount of people affected by redundancy and out of work has doubled in the BME category. It's gone, I think, from 4.5% to 9% at the end of 2020, whereas the difference for white people is just 1.1%. And there's going to be an obligation to report on ethnicity pay gap going forward. So that gap will clearly have widened, and people need to start thinking about that now, really, because I think the gender pay gap is going to get worse, probably because of COVID, but the ethnicity pay gap is going to be even worse. And we haven't started reporting on that yet, but it's going to be problematic, I think.
Thank you, that's great. Any other areas of hot topic you think are coming up, Sam?
Hot topic. Well, of course, holiday pay, annual leave entitlement, and how to calculate holiday pay is a constant hot topic. And I know that Kirsty could give us a masterclass on the key elements to consider and the various rulings that have impacted the complexity of holiday pay calculations. But I would just add that, like on the national minimum wage, we've discussed the national minimum wage rates previously because we knew what the rates were going into this. But the key change this year, and this was confirmed, I think, on budget day, the remit of the Low Pay Commission, whose job it is to make recommendations to government each year on what the rates of national minimum wage and national living wage should be for the following tax year, or for the following pay year. And of course, what's key this year is that the rate of national living wage is reducing from age 25 down to age 22. For the first time. So we're seeing that sort of reduction, and this is for pay reference periods beginning from the 1st or on or after the 1st of April. So, this is, and April is a key month for non-compliance with national minimum wage and national living wage. So if employers are looking to avoid being named and shamed, they need to be clear on what the rules are for implementing the new rates. And it's for pay reference periods that begin on or after the 1st of April. So if the pay reference period spans the 1st of April, then the older rates could apply, but it's the following pay reference period they would apply. And then, of course, we're still seeing that ongoing reduction in the national living wage applying in age range, so that ultimately it will apply for 21-year-olds from 2024. And that remit, I believe, was confirmed on budget day, I think, if my memory serves me correctly. So that's continues to be an item of interest. Redundancy pay, just in case you've missed the announcement, has been announced for Great Britain, and a slight increase from £538 per week to £544. At the point at which that was announced, there was no further news on Northern Ireland, which is currently £560 a week. Lou, any news from Northern Ireland?
No, because we're still stuck at Brexit, unfortunately.
Just on the holiday pay point, Sam, I did when I did a longer session on holiday pay. I mentioned a couple of cases, one being a Northern Ireland case, actually, Lou, which was the Chief Constable of the Police Service against Agnew, and that's the one where they said, a series of deductions could be might not be broken by a gap of more than 3 months. That's now scheduled to be heard at the Supreme Court on the 23rd and 24th of June. So that's a new development. And also the Flowers case, which is about whether voluntary overtime should be included. That's been scheduled to be heard at the Court of Appeal on the 22nd of June. So we're going to have some holiday pay cases for the summer, just for to keep everybody up.
A question here on holiday pay. If an employee reduces workday from 5 but still does 35 hours per week, what is the best way to calculate holiday pay?
Right, here we go.
Simon.
Yeah, holiday pay is calculated by taking the weeks of work and dividing by the number of weeks paid. Number of days has no relevance to holiday pay. The relevance may be in relation to entitlement and what proportion of a week there is. And on the basis of a proportion of a week, decide that basis and you divide it by that proportion. Sorry, that sounds a bit flippant, but the holiday pay is actually still just an average of 52-week earnings as a minimum. So it's your contract terms or a 52-week paid week average. Ignore 0 weeks. Does that help? If you're saying, has the entitlement changed? Probably not in the same tax year. If you've used 5 days, 28 days entitlement, I don't know what you'd say. Any thoughts there, Kirsty, for a mid-year change? I think you would change, it would be applicable really to the point of the holiday year where there is a permanent change.
I would have thought so.
Yes, so does
John,
that make sense?
John, have you dealt with that?
Yeah.
What a change entitlement mid-year, I think would be.
Yes, if there are 5 days on a 35-hour, and they've gone to 4-day and they're on 35-hour. So originally the entitlement would be 28 days. What would it be?
4 days.
If it's down to 4 days mid-year? And I think you would stick with the method, wouldn't you, until the end of the year? That's just my thought, my view.
I think it depends on when the contract permanently changes, doesn't it?
Sure.
Yeah, because the entitlement must change at the point the contract changes, doesn't it, to prorate?
Yeah.
Yeah, they may have an entitlement prior to that change that they've not taken yet. I guess it's probably the challenge. So it may be I've got 14 days.
You'd have to pro-rata both, wouldn't you? You'd have to pro-rata it. Yeah.
Yes, but what would the days pay be when they take it? And I guess there's an element of you would do the same thing, wouldn't you? So the entitlement that's under 5 days, you would do as 5 days. The entitlement under 4 days, you would do as 4 days. Is that?
Yeah, I think so. It's not a straightforward calculation, but that's what I think.
Would you not convert to hours? My experience, independent and regulator, would you'd look at hours. You'd convert everything into hours. And then let them take hours.
The challenge with ours sometimes, Andy, is it becomes very difficult to work out with the average week 52 and gets distorted. But yes, you can do it on an average basis that way. But is it an hours contract? So it all depends. It's quite a complicated question, Steve. If they wanted to put more detail in, it's the sort of thing that Lou and Sam will certainly know tickles my fancy, if that's the right thing to say, and like to explore.
Yeah, well, we could do. We can. We'll when we share the Q&A stuff, we can add a bit more context, but maybe it's something we can discuss in a little bit more detail, like I said, in a separate session or an upcoming question time, or even via email. So let's we'll follow up on that one after this. There's a couple of ones on pensions, if that's okay. We can just do a quick couple of those. So if pension is aligning with NI, is this aligning with ST or PT?
It's actually with LEL. So the lower threshold for automatic enrolment is with the lower earnings limit, so not the primary or secondary threshold. And the upper value for the upper automatic enrolment threshold is aligned to the upper earnings limit.
And the earnings
But
trigger
it
is
doesn't have to.
yeah, the earnings trigger is aligned with the primary threshold.
No, the earnings trigger is aligned with what was the personal allowance about 5 or 6 years ago,
Yeah.
which is the 10,000.
£10,000.
Yeah. But DUP look at it every year. They got a choice as to what they want to use. At the moment, for many years, they've been aligning the lower and upper threshold for automatic enrolment with the equivalent lower earnings limit and upper earnings limit for national insurance, but they don't have to. And the trigger, they aligned it with a tax personal threshold to start with, and they realised that was going up and up and up, and that means less people are going to get automatically enrolled. So they just they stopped it at 10, and they've kept it at 10 for about 5, 6 years now. Yeah.
Okay. And just one
more
more.
pension scheme rules predominantly would be the case, Sandy, because lots of schemes will do from pound one, but they won't do banded contributions at all. But it's looking at the exemption basis, but the primary and secondary threshold don't have actually anything to do with pensions.
No, indeed agree.
Okay, one last pension question then. So can you recover pension salary sacrifice from KIT payment? So I don't know that acronym, I'm afraid.
Keeping in touch.
I believe so. Yeah. Well, sorry, Kate. Did you want to say something as well?
No, Kit is keeping in touch, isn't it?
It's just a day's pay. So if your salary sacrifice says you take money from your salary, then Kit would be on the reduced. You'd have a salary sacrifice for that one day amount. Now, whether or not you could take all of it, that's a different question. That's more employment law. How much of the one day of the Kit you could take? Personally speaking, it would be just that one day's percentage, not a bigger chunk. But that's, I don't know, it depends what the contractual aspects are.
Yeah, and you probably have to look at minimum wage in relation to work time as well to make sure that you're actually paying them sufficient. Although the SMP, I think, can count a little bit towards that. You can't sacrifice SMP, but the top up potentially you can, but you've just got those other boundaries around it to think, what can I do? Because you've got other legal obligations.
Yeah.
Okay, good stuff. Any of our stuff on Hot Top? We have a final poll that we'd like to take, as but is anything else we want to add in the last couple of minutes when we move on to the final poll on the hot topics?
The
Could
only
I
other thing
just,
to
sorry,
sorry,
no, you go ahead.
after you, Lou.
Sorry, it wasn't listed on the hot topics, but it's just a reminder that it was on HMRC February bulletin, and it's the earlier year updates. The process has changed, and that from April 21, earlier year updates will no longer be valid submission type to make an amendment to that tax year up to the 5th of April 21. And I think it's important that that you be aware of that, so that there's nothing going to surprise you, especially as the way that Easter's falling this year, and we already have companies talking about shares vesting and they won't know until after the 31st of March, and we've got the public holidays and the non-payment days for backs. That the earlier year update process has changed and is effective from this April. That was all.
Thank you. Kirsty?
I was just going to say we're getting a lot of questions around testing and vaccines and what can be mandated, etc. ACAS has updated its guidance in the last week around testing and vaccines and pay, which I thought might be useful to just reference. It says, if staff are concerned about testing, guidance suggests that it may help for employers to consider paying them their usual rate of pay for time off after a positive test, or furloughing them. I'm not sure you could use it for that, but it's possible. And also in relation to the vaccine, it highlights a similar discussion and says that employers could consider offering paid time off for vaccine appointments and full pay rather than SSP if staff are off sick because of vaccine side effects. And the guidance advises that in most circumstances, it's best for employers to support staff to get the vaccine without making it a requirement. But it's that there's quite a lot on it, and there's quite a lot of questions coming out about it. And because of the link to pay, I thought it might be worth mentioning.
Thank
Can I
you.
ask? I was going to say, can I ask a question, Simon? I'm sorry, I should probably write it down in the chat box. But I wanted to ask Kirsty, can an employer insist on testing?
Well, there's lots of questions about whether they can or they can't. It depends on the circumstances they're in and what their contract says and what their job requires. And interestingly, even the stuff about the vaccine's been changed. So the guidance used to say employers cannot force staff to be vaccinated, and they've taken that out. So that's quite interesting. And they've also taken out employers should only make getting the vaccine mandatory if it is necessary for someone to do their job. They've taken that out as well, guidance this week. So there is a sort of a growing requirement, certainly around vaccines and testing. Now, we've always taken the view that if you can keep people safe, and you have kept people safe, you don't need to mandate testing. But it depends if you're working in an environment where you're working with vulnerable people, you're working in a care home, you're working even in schools, that there are public health requirements which mean testing may be mandatory in those circumstances, but not in every case.
Right.
And I think there's a change going on. So even the guidance about what you say and what you can't say is changing as things become more readily available. Local authorities are asking employers to test, but they can't require them to test. And so we're getting calls from clients saying, they're saying we have to test. And I'm like, well, you've been open the whole time. Nobody's had COVID. You've got safe certs. Why do you need to test? Because once you have to do the test yourself, you're taking on loads of obligations around personal data and health and safety requirements, which you may not need to do. So it's not a fundamental requirement, but it depends on. I'm not sure that's a brilliant answer because it depends, isn't it? But hopefully it's helpful.
No, that's helpful. Thank you, Kirsty. Sorry, Steve, I snuck in there with a question.
Not at all. That's what it's for. That's what it's called.
That's my usual phrase is it depends. It infuriates people at times, but often the right answer. The other aspect I think that you reminded me of, Lou, from the employer bulletin is, of course, the employer bulletin notified that all informal payrolling arrangements end.
Yeah.
So you want to payroll any benefit item, it needs to be registered for 6th of April 2021 onwards. So if you're informally doing it, that's flex spend schemes, etc. Officially, they end.
And I think what's really interesting about that is the fact that when you register for payrolling of benefits in kind, there is a process. There are rules, there are guidance on making the calculations. You might have had it slightly. I mean, I remember when it was introduced, HMRC said, well, we've consulted with employers who are voluntarily payrolling, and the system is being designed on the processes that they already undertake. But obviously, where you've got voluntary payrolling, then that process will have necessarily been designed by the employer on how they made those calculations, which may not mirror the rules for payrolling of benefits in kind. So if you find yourself in that situation where you are having to register to continue payrolling of benefits in kind, you'll need to check that your calculations match those of the guidance issued by HMRC. So now I'm not too certain what you do if you're currently payrolling beneficial loans or living accommodation values, which currently still aren't included in the payrolling of benefits in kind. So not too certain what happens there. I'm assuming that you would have to continue with the voluntary, but as Lou said and Simon said, it wasn't expansive what was covered in the employer bulletin. So we probably need a little bit more explanation there.
Yeah, should we go to the poll then, Steve?
Yep, so we'll launch the final poll. Here we go. So under normal, non-COVID circumstances, what subjects provide you and your colleagues with the biggest challenges? You can select all that apply. And here we've just started to group a few of these together. So it's just a bit of an interesting gauge on what typically keeps us awake at night. Whilst that's coming in, because I appreciate obviously we're almost at past. Obviously, thank you for everyone attending today and for asking questions. Obviously, we can't get through absolutely every single question asked, but what we will do is when we follow up with an email early next week to everyone who attended today, we'll have that Q&A transcript and we'll answer any questions that weren't mentioned today, just to make sure that every single question is picked up. The next payroll question time is on the 9th of April, and we'll open up the registration next week. So visit the SD Worx website from about Thursday next week, and the registration for that will be open. So let's have a look at the final stats. Voila.
Okay.
So closing minutes, Simon.
Yeah, sure. So that's an interesting response. I think that can influence us a little bit on some of the sessions that we look to do in the future, Steve. Interesting, statutory payments and leave is obviously an area. I presume that's sickness and maternity parental leave. Yeah, let's do a focus on that. And the benefits in kind has come up fairly high as well there. Is that right? 40%? On benefits. So maybe we look at flexible benefit, salary sacrifice, etc. P11D reporting. Yeah, we could do a session on that. I think we've got an event next week as well. Does the slide show the details on the next question time? I think you've said, and
yeah, excuse me. So coming up now, the next couple of sorry, just waiting for it. Here we go.
Sure, but I'd like to express my thanks to Sam, John, Lou, Kirsty and Andy for joining us again. It's been great having you. Hopefully we've had a good conversation. You've learned a lot. If you want to know more, come and ask the questions away, and we'll do our best to help within the realms that we can, and look forward to seeing you next time.
Have a great weekend, everyone. Thanks, everyone.
Bye, everyone.
Bye.
Bye. Bye. Bye.
Bye. Bye.
All right, we're good.
So 1 second.